The final quarter of 2017 was a great one for stocks. The Dow Jones Industrial Average, S&P 500, and NASDAQ all posted 3-month gains of better than 6%. Landmark federal tax reforms were approved and signed into law. Bitcoin, oil, and gold prices rose. Home buying accelerated, even though mortgages grew more expensive. Domestic indicators showed continued strength in consumer spending and hiring, as well as a pickup in economic growth. The Federal Reserve made another interest rate hike and started to reduce its balance sheet. All in all, it was an eventful and positive quarter for investors. The fourth quarter's major story was the passage of the Tax Cuts and Jobs Act. The new law created night and day changes in the Internal Revenue Code, nearly all effective January 1st. Its most dramatic changes were arguably the ones benefiting businesses. It slashed the corporate tax rate to 21% and let the majority of pass-through companies deduct the first 20% of income. The legislation also took the individual estate tax exemption north to $11.2 million, put the standard deduction at $12,000, and did away with dozens of long-standing deductions, plus the personal exemption. In 2019, it removes the individual mandate for health insurance. Most of the above changes are set to expire after 2025, barring renewal in Congress. Consumer optimism rose in the final months of the year based on improved consumer spending, increased retail sales, and an accelerating job market. Non-farm payrolls increased an average of 207,000 a month for the final 3 months of the year, with the main jobless rate at 4.1% at year-end. The Federal Reserve began unwinding its vast securities of portfolio and raised the federal funds rate another quarter point in December to 1.5%. The third quarter GDP growth came in at a strong 3.2% annual rate, and the Fed raised its projection of 2018 GDP to 2.5%, with 3 interest rate hikes indicated for the new year. Emerging market stocks had another fine quarter, ascending 7.1%, while developed international stocks rose a little over 5% in the third quarter. Bitcoin hit 5,000 on October 13th, peaked near 20,000 on December the 18th, and ended the year just above 14,600. Some journalists and economists wondered if Bitcoin fever amounted to a modern-day Dutch tulip mania, while others were more enthusiastic. Crude oil improved 15.5%, while gold and silver saw more modest price increases. Mortgage rates climbed higher in the quarter, with the 30-year fixed rate ending at 4%. Home buying emerged from a third quarter slump as resales rose in both October and November. New home sales were down slightly in October, but jumped over 17% in November. As of October, the S&P Case-Shiller Home Price Index was up 6.4% over the previous 12 months. All in all, the Dow had a phenomenal quarter, outpacing both the S&P 500 and the NASDAQ. The gains in the fourth quarter made 2017 the best year for stocks since 2013. The Russell 2000 small cap stock index rose 13% for the year, but large cap stocks finished 2017 with gains of almost 20%. Wall Street seems primed for a bullish first quarter. The economy's 2 to 3% growth will probably continue in the near term, and corporate earnings should get a boost from the tax reforms in the months ahead. All that said, warnings continue to sound that the market is overpriced. The S&P 500 is now trading at about 18 times forward earnings. Nearly 2 years have passed without a correction in the S&P 500, and the index had no more than a 2% dip during all of 2017. So while a return to normal volatility in the stock market this year is likely, optimism is still strong going into 2018. This concludes our video for the fourth quarter. As always, thank you for placing your trust in LifePlan Financial Group. We hope you have a wonderful winter season and a prosperous 2018.